Yo, yo, yo to the yo, yo, yo. Phew, I made it. Thank you very much, guys. This is BeautyBubble bringing you BabyPips.com, where on the channel for the next week or so, we're going to be doing crunch time on every single BabyPips.com lesson. So many traders that I have sent over to BabyPips, and so few traders have come back to me to let me know that they've actually gone through the whole course, which breaks my heart. So I have put it upon myself to just go ahead and go through the coursework, see where the areas are that maybe we can focus a little bit more on, make it more exciting, make it more inclusive, and get that work done and, you know, like on the shelf done. Everybody understands, they've all gone through it, and everybody's really happy with themselves so that truly we can just move on. And it's crazy. I'm going through the coursework, and no wonder everyone has always said to me, "You've gone through BabyPips, haven't you?" And I'll go, well, yeah. And they'll go, oh, okay. Well, now some of this makes sense. But I don't think that we are going through just these basic lessons often enough. So maybe by me getting in there and you know, trying to kind of, you know, unearth the nuggets and really start to move forward with getting this kind of, you know, rudimentary, elementary work out of the way. And I think this is the only way to do it, to do these very dry reads, and so that we can actually see what we have. So as we get started here, let me go ahead and get through the disclaimer and all of that sort of nonsense that everybody has to do. And I will put us on dark for just a moment, and then of course we will revisit the chart of the day, which is the Bitcoin US dollar Coinbase chart. Now that SegWit has been locked in, and we had just crazy numbers on all the channels all across the network: YouTube, TeamSpeak, Slacks, Discords, Reddit. I mean, so many people have come forward with incredible interest towards, you know, what I'm calling, you know, historical days in Bitcoin. So thank you so much. I think it's just marvelous that there's so much focus, you know. I think that's going to be my keyword today. So much focus on the industry. I'm really, really pleased to see all of that happen. Okay, so let's go ahead and get the what do I want to say? Oh yeah, we have to stop. Go ahead and stop that, and then I'll get through the disclaimer. And I think what I'll do is I'll read it from my own YouTube and get that up and going. Get the pop-out chat going. Welcome everybody here. Oops, welcome me. Go ahead and give ourselves our own thumbs up, which is always a good thing to do. And if you've thumbs up, thank you so much. And thank you to the watchers now. And also a great shout out to the replay viewers. I know that everyone isn't always able to catch me live, and also doesn't follow, you know, all the things that I do either. So I do appreciate when you stop by and give YouTube that love that says, hey, I get to be counted. All right, so you're coming here because we are going to learn cryptocurrency charting, and where we're at right now in the BabyPips.com lessons are types of charts. That's the area that we'll be talking about today. Now, generally, anytime that anybody comes to me, whether it's over at Twitter or here or my blogger, etc., that I'm really a puree of beauty, technology, financial markets, fashion, and books. It's always been like this. I'm really more of a lifestyle person. It just so happens that my professional life is a financial markets trader, and so that's why I come to you more often with my interest in the financial markets. So in this video, as I said, we're going to walk through BabyPips.com, the beginner's guide to Forex trading, with a special focus on cryptocurrency charting. This is a rapid-fire run-through of the course modules and how to navigate the site for maximum results. At times the video may be in audio only or in pause for breaks approximately every 10 to 15 minutes. The reason that we're doing that is to see whether or not we can actually chop up the content and then come back, fold in on itself, and see if we can make it better. As far as content value, we get a lot of this with people that especially are like social marketers, and they're always asking, for, well, you have to have value, your content creation just can't be hitting a switch, you have to bring people value. But on a scale of 1 to 10, there's been no preparation or script written, and the quality of production is very low. So it has been pre-rated by myself at a 2. So don't everybody get all over me, that, well, Beauty, you should show your face, and Beauty, you should do this. And no. It's self-admittingly, I'm placing the content value on a 2. This really has to do with, living well, trading well, making money, and doing good. Okay, so that's a lot of that isn't very sexy or funny or entertaining at all. It's a lot of hard work. So that's where we're going to put it. As far as YouTube standards, we're just going to set it at a 2. There's no affiliation with BabyPips.com or TradingView.com, which you'll notice when I showcase my charts, and none should be implied by reference or tone of the video or tone of my voice or how much authority I command over what I know about these places, etc. I have no affiliation with BabyPips.com and TradingView. You'll notice my Bitcoin address. This is very typical of people that are in the cryptocurrency space. Please don't look at this as though it's some sort of solicitation. Everyone shares their Bitcoin address, okay? The disclaimer. Please be advised that all content in the charts shown is meant for entertainment and educational purposes only. Trading the stock, bond, currency, commodity, and futures markets can be rewarding, but is also risky. Be aware that you can lose money and in some ways lose more than you have. It can also be profitable, but not without significant risks. You are responsible for your own independent investment transactions. The charts shown are not an investment advisory service. I encourage you to seek professional advice in regard to your own financial decisions. Information you may get from any chart shown and its discussions, like in after chat rooms and green rooms and other places, may not reflect my opinion. The chart and its content is not a solicitation, nor an offer for professional investment advice, nor is it an offer to buy or sell bonds, currencies, cryptocurrencies, commodities, and or futures. Phew, glad that I got that all out. There's been a lot of concern that some cryptocurrency broadcasters are not doing sufficient disclaimers, and they're horrible. I probably over at my Google Plus have like 15 different ways that one can actually express a disclaimer, and it sucks, right? Because you would think, well, listen, we're all adults here, we all understand. I don't hold a Series 7. I'm not soliciting, for you to pay me. No one pays me for any sort of financial advice. I'm not a professional in that field, okay? Not a professional. I don't hold a Series 7. And yet, there is a lot of, well, we're not going to do it because it's the wrong thing. It leads people down, odd paths and everything else. So just please, if you're out there and you're involved in cryptocurrency, really think about doing a disclaimer every once in a while on your broadcast. It's really important. I know this one seems a little lengthy, but we'll get it in that sweet spot where it belongs. Okay, so there you go on that. That didn't take too long. And my fan isn't going crazy either. So there's the disclaimer. I can now pop out my chat. And if you want to, you can chat with me. And inside of the chat, what we'll do is every single time I work on a lesson, I'll put the lesson title and the direct URL to where it is on the BabyPips. Before we get started, let's take a look at the chart again. We're looking at Bitcoin dollar pair on Coinbase, trading at 3446.82. And if you want to see my chart, I'll go ahead and put a link to the chart in just a little bit. But I'll show the chart a few times during the lesson so that I can get the view for my thumbnail. So I learned that over the last couple of days as well. So let's do a application window share. I'll do my chart first. Hide that, present it to everyone. And there is my chart. Leave that be like that for a moment so that we can get the thumbnail. I think it takes about, I don't know, maybe 30 seconds or so for the thumbnail. And then we have our pop-out chat. And then we'll get going. All right. That should be fine enough. Go ahead and stop the screen share so I can move the BabyPips window up. This is going to seem a little clunky because I just have the one. Let's see, we'll go all the way up to the, well, I think I'll just start where we need to, just types of charts. Put the hangout. And share, and here we go. Send it to everyone. And here we go. All right, everybody. Be sure that I'm not on mute, right? I'm not. Let's see. Yeah, we're doing good. Okie dokes. All right, so where we're at with BabyPips.com, we're in types of charts. Types of charts, we'll grab the header, we'll bring it over to the pop-out chat, and that's where we're at there, and then the unique URL, the BabyPips section, and get that in our chat as well. Here we go. So we can follow along when we do the chat archive and we put it in the comment section. Types of charts. What's your type? By that we mean charts. So section number, types of charts, 3 types of Forex charts and how to read them. Sometimes it's all about perspective when understanding a market. Different types of charts can influence how you analyze an asset like currencies. And here we go to the lesson. Let's take a look at the 3 most popular types of Forex charts. 1, line chart. 2, bar chart. 3, candlestick chart. Now, I should probably stop here and have you go into the BabyPips main landing page and run over to the Rates tab. Hit the Rates tab, let the drop-down come in, and go all the way towards the bottom until you find the cryptocurrencies widgets that BabyPips has, and select the very first one. Okay, and we'll definitely be covering more about the chart widget, and this particular lesson might be it. I don't know. Make a note on it after we're all done to see whether or not we should have really stopped here and then done a full lesson on the chart widget. Now we'll explain each of the Forex charts and let you know what you should know about each one of them. Line charts. A simple line chart draws a line from one closing price to the next closing price. When strung together with a line, we can see the general price movement of a currency pair over a period of time. Here's an example of a line chart for Euro USD, and there's a graphic. Bar charts. Unfortunately, this is not a chart at a bar. A bar chart is a little more complex. It shows the opening and closing prices as well as the highs and lows. The bottom of the vertical bar indicates the lowest traded price for that time period, while the top of the bar indicates the highest price paid. The vertical bar itself indicates the currency's pair's trading range as a whole. The horizontal hash on the left side of the bar is the opening price, and the right side horizontal hash is the closing price. Here's an example of a bar chart for the Euro USD, and then there is a graphic. Take note, throughout our lessons, you will see the word bar in reference to a single piece of data on a chart. A bar is simply one segment of time, whether it is 1 day, 1 week, or 1 hour. When you see the word bar going forward, be sure to understand what time frame it is referencing. Bar charts are also called OHLC charts because they indicate the open, the high, the low, and the close for that particular currency. Here's an example. And I've heard different people, they'll say, oh, look, I've heard different traders refer to the OHLC charts. Here's an example, and they do give a graphic of a price bar showing the low, the open, the close, and the high from bottom to top. But it's actually open, high, low, close. Got it? Open, which opens the bar, the high, which is the highest print, the low, which is the lowest print, and then the close. All right, open. The little horizontal line on the left is the opening price. The high is the top of the vertical line defining the highest price of the time period. The low is the bottom of the vertical line defining the lowest price of the time period. And the close is the little horizontal line on the right, which defines the closing price. Okay, hope everyone can follow that. That's about the bar. The next one will be candlesticks charts. Candlesticks charts. Candlestick charts show the same price information as a bar chart, but in a prettier graphic format. Candlestick bars still indicate the high to low range with a vertical line. However, in candlestick charting, the larger block or body in the middle indicates the range between the opening and closing prices. Traditionally, if the block in the middle is filled or colored in, then the currency pair closed lower than it opened. In the following example, the filled color is black. For our filled blocks, the top of the block is the opening price, and the bottom of the block is the closing price. If the closing price is higher than the opening price, then the block in the middle will be white or hollow or unfilled. I'll read that again to you. If the closing price is higher than the opening price, then the block in the middle will be filled, white, or hollow, or unfilled. Here at BabyPips.com, we don't like to use the traditional black and white candlesticks. They just look so unappealing. And since we spend so much time looking at charts, we feel it's easier to look at a chart that's colored. A color television is much better than a black and white television, so why not splash some color on those candlestick charts? We simply substituted green instead of white and red instead of black. This means that if the price closed higher than it opened, the candlestick would be green. If the price closed lower than it opened, the candlestick would be red. In our later lessons, you will see how using green and red candles will allow you to see things on the charts much faster, such as uptrend, downtrends, and possible reversal points. For now, just remember that on Forex charts, we use red and green candlesticks instead of black and white, and we will be using these colors from now on. Check out these candlesticks, BabyPips.com style. Oh yeah, you know you like that. And then there's a graphic showing the green bodied candle and the red body candle. Here's an example of a candlestick chart for the Euro USD. And once again, it's another graphic that shows the red candle and the green candle. The purpose of candlestick charting is strictly to serve as a visual aid, since the exact same information appears on an OHLC bar chart. The advantages of candlestick charting are: candlesticks are easy to interpret and are a good place for beginners to start figuring out Forex chart analysis. Candlesticks are easy to use. Your eyes adapt almost immediately to the information in the bar notation. Plus, research shows that visuals help with studying, so it might help with trading as well. Candlesticks and candlestick patterns have cool names such as shooting star, which helps you to remember what the pattern means. Candlesticks are good at identifying market turning points, reversals, from an uptrend to a downtrend, or a downtrend to an uptrend. You will learn more about this later. Now that you know why candlesticks are so cool, it's time to let you know that we will be using candlestick Forex charts for most, if not all, of the Forex chart examples on this site. And then it is quiz time. All right. Remember, we're going to save the quizzes for later. I'm going to try and get them all at the end of the, let's see here, where are we? Back to the Hangout. All right. All right, the next lesson. Forex support and resistance. There we go. Go ahead and we'll get the header and put it in the pop-out chat and grab the URL and put it in the pop-out chat. And there we go. Okay, Forex support and resistance. Support and resistance is one of the most widely used concepts in Forex trading. Strangely enough, everyone seems to have their own idea on how you should measure Forex support and resistance. Let's take a look at the basics first. Look at the diagram above. As you can see, this zigzag pattern is making its way up a bull market. When the Forex market moves up and then pulls back, the highest point reached before it pulled back is now resistance. As the market continues up again, the lowest point reached before it started back is now support. Everyone followed that now? When the Forex market moves up and pulls back, the highest point reached before the pullback is resistance. As the market continues to go up again, the lowest point reached before it started back is now support. There's the line there. In this way, resistance and support continually formed as the Forex market oscillates over time. The reverse is true for the downtrend. Go ahead and take a break. Hold up, guys. All right, let me see. We'll go ahead and we'll get, put me on stop here for just a moment. And let's get my chart up. And when you get those feelings, that maybe you should just focus on price for just a moment. I'm getting that feeling. Go ahead and we'll look at the 1 minute. And let me go ahead and give this some space so you guys can actually see It developed at 3425. I'm going to keep an eye on what's happening here, if you don't mind. And do a quick screen share, application window, share the chart, share, 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 present to everyone, and there we go. All right, so I'm going to grab some water and let you guys stay focused on the chart a little bit here. And thanks again to the replay viewers too.
Yeah, but
You guys will be on mute in just a moment. Okay, so let's get us back here. We've also brought up the Ethereum USD Coinbase chart in the 30-minute. I could have done the smaller time frame, but you wouldn't have been able to see how this elegant rise has really just been fantastic. It looks like they are going to hit their $300 mark for sure, but you never know. You know, sometimes those whole numbers can act as resistance points. Speaking of support and resistance, and it might be kind of cool that, as you could see, that the example was showing you resistance, support, resistance, support, resistance, support. You see? And so I could actually draw that on the chart, as you guys can see. And that's what I meant, that maybe, especially where we're at in the lesson, that it might be kind of cool for you to actually see a real-time working chart and how I would arrive at where support and resistance is based on the lesson, okay? That might be kind of cool to do that if you guys want me to. Happy to do that. All right, so we will see if we are going to get the 300 out of Ethereum USD. It is part of my tags, by the way, is to showcase the Ethereum chart. So might as well do it. And I'm getting a lot of more cooperation out of my TradingView chart today. I think maybe my link was getting a little lazy or something like that. So I just kind of reloaded my charts today because I only get the one, so you have to be kind of careful. I'm going to take it a little slower. Okay, so there we go on that. Alrighty. Then the next bit is, once we see that go ahead and go back over to the chat. We'll get going in just a moment. Showing ETH, USD, and I believe I have it on the Coinbase here. Right. Okay. Maybe we'll just keep it on here and see if it gets there. I talked to that guy about that music that he has. I think that he's using a mixer and all that stuff that I've just avoided. Because he not only has the music, but man, he really has such a great like social attitude, you know? Meaning that he can just talk about anything. He's really a very nice fellow. If you go to my Twitter, you'll see that I promoted their channel today a couple of times, and he was just so delightful. I was only there for a couple of minutes, and he was kind of putting together all of his frames. You know, on the OBS, you get to, you know, move things around, and obviously he has a pretty decent computer and a really nice camera. And so I was just like, well, what if you were to put this over here and there to there? And as it worked out, it was just a nice, the formatting was really nice. And he gave me one of those wrenches. And like a wrench is where you make someone like a moderator so you can post links and such. And I thought that that was like really sweet. Like, you know, that doesn't happen to me very often. It happens in every once in a while. It'll happen in a really big room, and I'm like, no, 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 no. I'm the last person you want to have be a moderator. I'm just not very good at it. And but he was being so sweet because over on YouTube, if you have the moderator status or the wrench, then you are able to put links up. And so as long as you're putting out good links or you're correcting a link or something like that, it's kind of a neat thing to be a moderator on a live YouTube. I mean, I thought it was very sweet of him to do. But definitely check my Twitter out and you'll see, most recently I promoted the channel, and then when I'm done with the broadcast this evening. I'll probably run back over there. I think he was going to be taking his broadcast on mobile, and he may live near the beach in Australia, and he might be taking his broadcasting rig to the beaches. So it's like, golly, got all that going on, especially that OBS. And I've spent so much time with people that have very complex setups, and some of the things that you can do are just, they make things entertaining and more engaging. And I've just never felt like I could really juggle all of, all the bits and pieces. And of course, you have to take a little bit here, and then you build on that, and you build some muscle and some experience, and you learn all the pitfalls, and of course, it takes a lot of time. And I think you have to have a special talent for it. I really do. But OBS, maybe we'll see how things go with the BabyPips, and maybe I'll download the OBS, because certainly it would be much more, a lot easier, instead of the point and click and opening, to be able to have a couple of different frames, one for the chart and one for the dry read of the BabyPips. And then if I wanted to show you more than one chart too, that would be good. And of course the pop-out chat, if that was ever something that was active. But even the pop-out chat helps me stay connected with, the workflow, what I've shown, what I thought maybe I would show. Connect, kind of like what are called show notes, And so, because I could take a copy and paste from anything else that I had done, and then put it in the live chat that stays with the archive for YouTube. The YouTubes. Okie dokes. Well, looks like it's going to be kind of stubborn. Look at that, those final few cents. Isn't that wild? Open up the details part of trade review. Probably look a little nicer for you guys. Oh man, it's going to be that stubborn, huh? Oh. Well, it would be nice to get it on record if it hits 300. Well, you know what we'll do? We'll keep an eye on it, and what I can do is open up the BabyPips, and you guys can still be watching this. I can move this a little bit over to the side so I can see price of the chart. And there we go. And we'll just keep on going here. Let me make sure I can do that. Let's see. It's going to take up a little bit of room there. Well, just going to drop back down. All right, we'll keep going here. All right. Look at the diagram above. As you can see, the zigzag pattern is making its way up. It's a bull market. When the Forex market moves up and then pulls back, the highest point reached before it pulled back is now resistance. As the market continues up again, the lowest point reached before it started back is now support. In this way, resistance and support are continually formed as the Forex market oscillates over time. The reverse is true for the downtrend. Next section, Plotting Forex support and resistance. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes, you will see a support or resistance level that appears broken, but soon after that, find out the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by the candlestick shadows. Notice how the shadows of the candles tested the 1 spot 4700 support level. At those times, it seemed like the market was breaking support. In hindsight, we can see that the market was merely testing that level. So how do we truly know if support and resistance was broken? There is no definite answer to this question. Some argue that a support or resistance level is broken if the market can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happened when the price actually closed past 1 spot 4700 support level. In this case, the price had closed below 1 spot 4700 support level, but ended up rising back above it. If you had believed that this was a real breakout and sold this pair, you would have been seriously hurting. Look at the chart now. You can visually see and come to the conclusion that the support was not actually broken. It is still very much intact and now even stronger. So the term broken, real breakout, actually broken, do you see this terminology? It can get very dicey when you're speaking to other traders too, I'm sure you can imagine. To help you filter out these false breakouts, you should think of support and resistance more as zones than concrete numbers. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. The reason is that line charts only show you the closing price, while candlesticks add the extreme highs and lows to the picture. These highs and lows can be misleading because oftentimes they are just the knee-jerk reactions of the market. Remember, it says oftentimes they are, not all the times. Not all the time. It's like when someone is doing something really strange, when asked about it, he or she simply replies, "Sorry, it's just a reflex." When plotting support and resistance, you don't want the reflexes of the market. You only want to plot its intentional movements. Looking at the line chart, you want to plot your support and resistance lines around areas where you can see the price forming several peaks or valleys. Other interesting tidbits about Forex support and resistance. When the price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance had been holding, and they give you a chart. With a little practice, you'll be able to spot potential Forex support and resistance areas easily. And the diagram shows you major resistance, tested many times, minor resistance, strong support, minor resistance, minor support, etc. In the next lesson, we will teach you how to trade diagonal support and resistance lines, otherwise known as Forex trend lines. All right, we'll just take a little bit of a break. I don't know if we're going to see 300. That is so crazy how stubborn that price would be. Look at that. So what did I say before? It looks like we're going to get 300, but sometimes when that 300, because it's that whole number, people are just horribly resistant to it. Just an emotional level. They think they want to break it, then they don't, and then they're just scalping each other, 50 cents here, 25 cents here. It's up $29.12 on the day, or 10.79% on the session. And so, there's a lot of scalping going on up there. People jockeying. I hope that you find that that's very interesting to watch in real time. Okay. Now the next lesson, let's see where we're at here. Trend lines. Trend lines, trend lines. Let me see. All right. Okay. Right, that should be a pretty easy one to get through. So trend lines, and we'll put that in our chat. What's coming up next? And here is the forced URL. So you have it for yourself. And I will be on mute for just a few minutes here, okay? Okay, back to business here. All right, so we're on to trend lines. Trend lines. And we have that in the chat. And you have your direct link in the chat. Trend lines are probably the most common form of technical analysis in Forex trading. They are probably one of the most underutilized ones as well. If drawn correctly, they can be as accurate as any other method. Unfortunately, most Forex traders don't draw them correctly or try to make the line fit the market instead of the other way around. There's a graphic that shows an uptrend line support and a downtrend line resistance. In their most basic form, an uptrend line is drawn along the bottom of easily identifiable support areas or valleys. In a downtrend, the trend line is drawn along the top of easily identifiable resistance areas known as peaks. How do you draw trend lines? To draw Forex trend lines properly, all you have to do is locate two major tops or bottoms and connect them. What's next? Nothing. Is that it? Yep, it's that simple. Here are trend lines in action. Look at those waves. Uptrend, downtrend, sideways trend, uptrend, downtrend is the graphic. Types of trends. There are three types of trends. Uptrend, higher lows, downtrend, lower highs, sideways trends, ranging. Here are some important things to remember using trend lines in Forex trading. It takes at least two tops or bottoms to draw a valid trend line, but it takes three to confirm a trend line. The steeper the trend line you draw, the less reliable it is going to be, and the more likely it will break. Like horizontal support and resistance levels, trend lines become stronger the more times they are tested. And most importantly, do not ever draw trend lines by forcing them to fit the market. If they do not fit right, then that trend line isn't a valid one. Next lesson, channels. Next lesson, channels. All right. I think we'll have to probably do a lot of charts for that packet. So I'm thinking here. Okie dokes. Next lesson, channels. Now, by the way, we are in the elementary school. I think we graduated from one of the schools, and I didn't see it actually happen in the little reader. Okay, there we go. Channels. If we take this trend line theory one step further and draw a parallel line at the same angle of the uptrend or downtrend, we will have created a channel. No, we're not talking about ESPN, National Geographic Channel, or Cartoon Network. Still, this doesn't mean that you should walk away like it's a commercial break. Channels can be just as exciting to watch as Game of Thrones or Keeping Up with the Kardashians. Channels are just another tool in technical analysis which can be used to determine good places to buy or sell. Both the tops and bottoms of channels represent potential areas of support or resistance. To create an up ascending channel, Simply draw a parallel line at the same angle as an uptrend line and then move that line to position where it touches the most recent peak. This should be done at the same time you create the trend line. To create a down descending channel, simply draw a parallel line at the same angle as the downtrend line and then move that line to a position where it touches the most recent valley. This should be done at the same time you create the trend line. When price hits the lower trend line, this may be used as a buying area. When prices hit the upper trend line, this may be used as a selling area. Types of channels. There are 3 types of channels: ascending channel, higher highs and higher lows; descending channel, lower highs and lower lows; and horizontal channel, known as ranging. Important things to remember about drawing trend lines. When constructing a channel, both trend lines must be parallel to each other. Generally, the bottom of a channel is considered a buy zone, while the top of channel is considered a sell zone. Like in drawing trend lines, do not ever force the price to the channels that you draw. A channel boundary that is sloping at one angle, while the corresponding channel boundary is sloping at another, is not correct and could lead to bad trades. Next lesson, how to trade support and resistance. Next lesson is how to trade support and resistance. Grab the banner, put it in our chat. Go here, grab the URL. Lost my chat. There it is right there. There we go. Put it down and grab this here. Okay. How to trade support and resistance. Now that you know the basics, it's time to apply these basics, but extremely useful technical tools in your trading. Because here at BabyPips, we want to make things easy to understand, we have divided how to trade support and resistance levels into 2 simple ideas: the bounce and the break. The bounce. As the name suggests, one method of trading support and resistance levels is right after the bounce. Many retail forex traders make the error of setting their orders directly on support and resistance levels and then just waiting for their trade to materialize. Sure, this may work at times, but this kind of trading method assumes that a support or resistance level will hold without price actually getting there. You might be thinking, why don't I just set an entry order right on the line? That way I am assured the best possible price. When playing the bounce, we want to tilt the odds in our favor and find some sort of confirmation that the support or resistance will hold. For example, instead of simply buying right off the bat, we want to wait for it to bounce first before entering. If you've been looking to go short, you want to wait for it to bounce off resistance before entering. And there are 2 graphics here. By doing this, you avoid those moments where price moves fast and break through support and resistance levels. From experience, catching a falling knife when trading Forex can get really bloody. The break. In a perfect world, Support and resistance levels would hold forever. McDonald's would be healthy, and we'd all have jetpacks. In a perfect Forex trading world, we could just jump in and out whenever price hits those major support and resistance levels and earn loads of money. The fact of the matter is that these levels break often. So it's not just enough to play bounces. You should also know what to do whenever support and resistance levels give way. There are two ways to play breaks in Forex trading: the aggressive way or the conservative way. The aggressive way. The simplest way to play breakouts is to buy or sell whenever price passes convincingly through a support or resistance zone. The key word here is convincing, because we only want to enter when price passes through a significant support or resistance level with ease. We want the support or resistance area to act as if it just received a Chuck Norris karate chop. We want it to wilt over in pain as price breaks right through it. The conservative way. Imagine this hypothetical situation. You decided to go long Euro USD, hoping it would rise after bouncing from a support level. Soon after support breaks, and you are now holding on to a losing position with your account balance slowly falling. Do you A, accept defeat, get the heck out and liquidate your position, or B, hold on to your trade and hope price rises again? If your choice is the second one, then you will easily understand this type of Forex trading method. Remember, when you close out a position, you take the opposite side of the trade. Closing your Euro USD long trade at near break-even means you will have to short the Euro USD by the same amount. Now, if enough selling and liquidation of losing positions happens at the broken support level, price will reverse and start falling again. This phenomenon is the main reason why broken support levels become resistance whenever they break. As you would have guessed, taking advantage of this phenomenon is all about being patient. Instead of entering right on the break, wait for price to make a pullback to the broken support or resistance level and enter after the price bounces. And then they give you a graphic, a few words of caution, all in bold. In Forex, actually it's bold and uppercased. This does not happen all the time. Retests of broken support and resistance levels do not happen all the time. There will be times the price will move just in one direction and leave you behind. Because of this, always use stop loss orders and never, ever hold on to a trade just because of hope. Oops, sorry about that, folks. The caps lock key got stuck. Next lesson, summary, trading, support, and resistance. The next lesson is summary, trading, support, and resistance. We'll grab the banner. We'll put that in our chat. I think I'm going over my time actually too here. So maybe what we'll do is, let's see how long this one is. Let's see how long this one is. I don't know. I'm going to pull up and download the badge from my channel. Oh, it's not so much. We'll go ahead and we'll cover this. Here's the summary. Trading, support, and resistance. I'll see if I can get through this really quickly. When the market moves up and then pulls back, the highest point reached before it pulls back is now resistance. As the market continues up again, the lowest point reached before it climbs back up is now support. One thing to remember is that horizontal support and resistance levels are not exact numbers. To help you filter out these false breakouts, you should think of support and resistance more of as zones rather than concrete numbers. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. Another thing to remember is that when price passes through a resistance level, that resistance could potentially become support. The same could also happen with a support level. If the support level is broken, it could potentially become a resistance level. Trend lines. In their most basic form, an uptrend line is drawn along the bottom of easily identifiable support areas, known as valleys. In a downtrend, the trend line is drawn along the top of easily identifiable resistance areas or peaks. There are three types of trends: uptrend, higher lows; downtrend, lower highs; sideways trends, ranging. Channels. To create an up ascending channel, simply draw a parallel line at the same angle as an uptrend line and then move that line to a position where it touches the most recent peak. To create a down descending channel, simply draw a parallel line at the same angle as the downtrend line and then move that line to a position where it touches the most recent valley. Ascending channel, higher highs and higher lows. Descending channel, lower highs and lower lows. Horizontal channel, ranging. Trading support and resistance levels can be divided into two methods: the bounce and the break. When trading the bounce, we want to tilt the odds in our favor and find some sort of confirmation that the support or resistance will hold. Instead of simply buying or selling right off the bat, wait for it to bounce first before entering. By doing this, you avoid those moments where price moves so fast that it slices through support and resistance levels like a knife slicing through warm butter. As for trading the break, there is the aggressive way and there's the conservative way. In the aggressive way, you simply buy or sell whenever the price passes through a support or resistance zone with ease. In the conservative way, you wait for price to make a pullback to the broken support or resistance level and enter after the price bounces. And then we get into quiz time. All right, so I think what we'll do is we will stop right there because then we get into Japanese candlesticks. So the next lesson will be, what is a Japanese candlestick? So that should be exciting. And I'll probably start covering that tomorrow, if that makes sense to everybody. All right, so let's get back to our chart. And we are trading at 34.3279, up 1.02% on the session, or $34.56. And it's been just a very active day, as I'm sure that everybody is well aware. And let me make sure that, I think what I'm going to do is read, go ahead and read about the channel again, maybe. I think. Where are we? Let's go here. Here. Okay, so anyway, thank you very much, guys, especially to the replay viewers if you catch us on the replay. If you've enjoyed this sort of content and you want to encourage it, especially since I need to kind of refold all this back and to see if we can get some really, really tight 10 to 15 minute videos out of these long-winded dry reads of BabyPips.com. So in this video, I walk through BabyPips, the beginner's guide to Forex trading, with a special focus on cryptocurrency charting. That's what we really want to get at the end of all of this. This is a rapid fire run through of the course modules and how to navigate the site for maximum results. At times the video may be in audio only or on pause for breaks approximately every 10 to 15 minutes. As far as the content value, on a scale of 1 to 10, there's been no preparation or script written and the quality of production is very low. So it has been pre-rated at a 2. I have no affiliation with BabyPips or TradingView, which is the chart that you're looking at right now, and none should be implied by reference, inference, or tone of my voice, or even the tone of the video. You'll notice also in the description I have my Bitcoin address. This is very typical of those in cryptocurrency. Disclaimer would be, please be advised that all content in these charts are meant for entertainment and educational purposes only. Trading the stock, bond, currency, commodity, and futures markets can be rewarding, but is also risky. Be aware that you can lose money and in some ways lose more than you have. It can also be profitable, but not without significant risks. You are responsible for your own independent investment transactions. Charts shown are not an investment advisory service. I'll get over that. I encourage you to seek professional advice in regard to your own financial decisions. Information you may get from any of the charts shown and its discussion in other chat rooms, green rooms, Reddit, Slack, etc. may not reflect my opinions. The chart and its content is not a solicitation, nor an offer for professional investment advice, nor is it an offer to buy or sell stocks, bonds, currency, cryptocurrencies, commodities, and or futures. This has been the BabyPips.com series. I'm BeautyBubble. Thank you so much, you guys. Please subscribe to the channel if you'd like to. You can find me in other social channels as well. Feel free to leave a comment in the comment section because we are trying to, I'm going to put everything in the comment section, including the entire archive of the chat. So that kind of puts everything together. And tomorrow we will start off with what is Japanese candlestick? What is a Japanese candlestick? So it should be really fun. Hope so. All right, so that is that. And thanks a lot. I'll see you guys later. Bye.